and my guess, and everybody's, trying to figure out what the Fed's going to do. I think what we'll get is 325 basis point hikes during this calendar year. That's not a lot.
Right.
And so, at the end of the day, they'll err on the side of waiting for inflation to come down as they repair the supply chain, hopefully, over the next 2 to 3 quarters.
Capitalist Kevin, always good to be with you. Nice to see you.
Great. Thank you very much. Good to be here.
Excited to get your thoughts and insights on the inflation matter. I pulled up a recent quote of yours where you referred to inflation as an emergency. Now, I haven't heard that before. It's an emergency for you.
Well, it is. Politically, it's a big emergency for the Biden administration, and let me explain why. First of all, the administration and many other pundits for a while were calling the inflation numbers transitory. That's simply not the fact. And the reason this has happened is we have never printed 12, cycles. In other words, for 2 years, 24 months, we printed $3 trillion. That's never happened ever in any economy anywhere on earth. And so that's incredibly inflationary. If you did that in some countries, you would have hyperinflation, but the American economy is so large that it was just smaller in many respects. But still 7%. These are huge numbers. You haven't seen this since the 80s. Now, inflation kills presidencies. Why? Because where it hurts most is in food and energy. So if you're driving up to fill your car up in San Francisco or San Diego or Texas right now, and you're paying $5.05 a gallon, that really makes you unhappy. And then you go to buy protein in the grocery store, it's up 24%, 25%, or in some cases you can't even get it. For example, here in South Beach in Miami, we can't get any ham right now because there's no transportation. 20% of the drivers that drive trucks are not working right now, partly because we paid them not to work and partly because of COVID still rampaging around different places. But, at the end of the day, it is an emergency because you can't stop but think about what you're paying. And that makes people unhappy, and they reflect it when they go to the polls. So traditionally, the incumbent always loses seats in the midterms. We're now in midterm season. That's coming in November. But in this midterm election, I think you're going to see a slaughter fest. It's going to be really ugly for the Biden administration.
Yeah, slaughter fest. Now, do you think that this will cause the Fed to become more aggressive and act quicker with their interest rate hikes then, if inflation is the 1,000-pound gorilla in the room, as you call it?
No, I don't think so. And I'll tell you why. You've got really good numbers in employment. That's okay. You've got inflation sort of 6.2 to 7%. That's not okay. But you also have a very broken supply chain system right now, very broken. And part of the inflation numbers are supply chain. So it's really hard to put the brakes on the economy and make the economy more expensive for the supply chain by raising rates. So this will temper their enthusiasm. And my guess, and everybody's, trying to figure out what the Fed's going to do. I think what we'll get is 325 basis point hikes during this calendar year. That's not a lot.
Right.
And so, at the end of the day, they'll err on the side of waiting for inflation to come down as they repair the supply chain, hopefully, over the next 2 to 3 quarters.
So, Kevin, why do you think they wouldn't act more aggressively then?
Because the risk you have in moving aggressively is you cause a recession. A recession when supply chain is broken is particularly painful. So they're in a bit of a tight squeeze here. Inflation is actually taxed. When you have cash sitting in the bank making 20 basis points and inflation 7%, you're effectively being taxed at 6.8% on your cash. Buying power is going down by that much. And so that's painful. But if all of a sudden you dry up the economy's momentum and people start losing their jobs because it's a recession, that's a much worse place. So pick your poison. That's
right.
Really what the Fed's trying to do. And I think they'll err on the side of being a little more dovish.
I'm curious to know, because obviously their other focus is keeping the stock market afloat here. Could there be a situation where you can fight off inflation successfully, but at the same time not crashing the market? Can you do that?
You can. That's called a soft landing, and it is possible. And I think that's going to happen because the underlying economy is very strong right now. Consumers have a lot of cash. We gave them $3 trillion worth of cash over the last 2 years, and it's sitting in bank accounts all over the country. And assets, hard assets, everything from cars, watches, jewelry, and stocks have all stayed very, very strong because there's so much of this cash around. And so at the end of the day, I think we're going to have about 8% earnings growth in the S&P, add another 1.5% for dividends. So this year is going to return about 9.5%. That's a pretty normal year. I think that's much better than being in fixed income and much better than being in cash, which is why you see the markets relatively, strong and buoyant on at least the index basis. There are names within it that have had major corrections, but the overall market is still the place to deploy capital.
I want to pick up on two things you said there. One, when you said the supply issue, is part of the equation when we're talking inflation, because I've had experts on, a professor recently who said it has nothing to do with supply chain. It's really just the money that's being pumped into the system that's causing it.
I wouldn't agree with that. I'm living with it in my private companies. And the one I always use as an example is my gym equipment company, very successful, called PRX in Fargo. That's the heart of America. And we were buying all of our elements for the gym equipment from Asia prior to the pandemic. Now we can't get them. So we've had to source them domestically at a 33% increase in the input costs. So we increased our pricing for our gym equipment by about 17%. That's pure inflation. There was no issues with sales. They continued to grow, absorbed by the consumer. But we would, to be competitive, drop our prices when the supply chain is working again, when we can get nuts and bolts and barbells and seats and everything else back from our original suppliers. So to say that it doesn't have any effect to break the supply chain and it's not inflationary would be incorrect.
You mentioned cash. Are you looking to lessen your position in cash?
It's been a real challenge. It really has been. I sold off a lot of real estate over the last 24 months, commercial real estate for various reasons. That went to cash. And when I called the cash desk, they offered me 22 basis points. And that's the journey I took into crypto. I'm now using stable coins with a company called Circle in USDC to actually stake stable coins in 30, 60, 90-day contracts. And I'm getting about 6.5%. So at least I'm holding my own against inflation. But that is a cryptocurrency and it's not regulated yet. So I don't expect many corporate institutions would do the same thing. It took me 6 months to get my auditors to sign my statements on this, and they only allowed me to treat it as if it was equity. So I can only have up to 5% in any one mandate in stablecoin or any crypto. So there's a lot of moving parts here. Cash is not a good place to be. People debate it all the time. But you are really getting taxed at a huge rate with cash right now.